People are moving out of Silicon Valley, and I'm gonna tell you why. Hey, what's going on everybody? Welcome back to my channel. My name's Cesar Yanes, and I'm your real estate authority here in Silicon Valley and on YouTube. And today I'm gonna show you why, in fact, people are moving out of Silicon Valley. And I'm also gonna show you some data that suggests why they're doing so. So stay tuned. All right, so let's break down why I think people are starting to move out of Silicon Valley, all right? So I'm gonna show you this heat map right here. I'll put it on the screen so you can see it as well. So this pretty much is an active listings as of literally last week. I pulled it last week at the end of September. And this is the active listings in the different cities in the South Bay compared to a year ago. So it's year over year. So it's what's now active versus what was active a year ago. And as you can see in the graph, pretty much everything is down except for the heart of Silicon Valley. As you can see to the left, bottom left, Saratoga is 40% down active listings. Los Gatos is 16% down. Campbell is 26% down. Downtown San Jose and touching Santa Clara is 10% up, but the rest, Milpitas is 26% down. Right underneath Milpitas, around Berryessa, Alviso, North San Jose is 37% down. Evergreen 28% down. Silver Creek around 40% down. So as you can see, active listings in the South Bay are way down year over year. However, the only thing that is not down is the heart of Silicon Valley, which is Santa Clara is 21% up, Cupertino is 10% up, and Sunnyvale is 17% up, which is crazy. Out of the whole South Bay, only those three cities are up today, active listings versus what they were a year ago. Now just to continue to compare the numbers, I'm gonna show you this other heat map, which is the South County, anything south of Berryessa area, San Jose pretty much. I mean Silver Creek and San Jose. So as you can see in this one, I'll put it on the screen here real quick so you can see the numbers as well. Morgan Hill is 47% down. San Martin is 90% down. That's absolutely bananas. And Gilroy is also 60% down. Way low compared to last year. It means there's not enough supply. And lastly, a little above Sunnyvale, north of Sunnyvale, this is another heat map. I'll put it on the screen as well. So Mountain View, as you can see, is barely just down 6%. Los Altos and Los Altos Hills are way down. It's a more expensive area. So 24% down Los Altos, 21% down Los Altos Hills. As you can see, Palo Alto, that's near Facebook, near the big tech, 42% up. 42% up. Literally more than half, almost more than half of what was active houses for sale in the market, more than half is on the market for sale right now compared to last year. That's crazy, that's bananas. Now, to the next heat map. That was active listings on the market in Silicon Valley. Now, this is pending listings. Same date compared to last year, year over year. So Sunnyvale, 56% up. So even though we have a lot more houses for sale, 56% up is still higher than our 17% active listing percentage. Meaning, even though we have more houses for sale right now, there's still way more demand. A lot of people that have been waiting to move into Sunnyvale for years and years are finally jumping into the market, taking advantage of the low interest rates. It's the time for them. Santa Clara, 72% up. This is the absorption rate, meaning, there's a lot more buyers than there is some demand. I mean, Cupertino, 2% down, Saratoga, 3% down. But pretty much in this one, as you can see, even though on the south, in the South Bay, San Jose, Berryessa, Milpitas, Evergreen area, Silver Creek area, all those places where the active listings were down, the pendings are way up year over year. Milpitas, 49%. Downtown San Jose, 24%. Berryessa around 7%, South San Jose 24%. Even South County, borderline South County, they're at the bottom, 195% up. So this just shows you there's still way more demand than there is supply in the Bay Area. I mean, Silicon Valley, even though in the South Bay houses are down for sale in San Jose, the pending rate is way higher, so there's still a lot of buyers. There's more sales happening now than a year ago. And the crazy thing is, borderline South County, almost getting near to Morgan Hill, is 195% up. So what I'm thinking is, people that live here in the heart of Silicon Valley, Mountain View, Sunnyvale, Santa Clara, Cupertino, all these people that are probably working at tech companies and have indefinite times to go back to work, maybe these people have finally said, hey, if going back to work is indefinite, or maybe in the future I only have to go in once or twice a week when this gets better post-pandemic, then maybe it's worth it to buy something bigger outside of the heart of Silicon Valley, and it's worth the commute. It's worth that 30-45 minute commute. If I'm only gonna go into work once or twice a week, I'll get a bigger house for less money. You get that 1 or 2 extra bedrooms, that extra backyard, huge lot, and it's worth it now because the commute it won't be as much as before pandemic, right? Now let's look at the pending listings in the South County as well. Morgan Hill up 46%, San Martin down 14%, and Gilroy up 13%. So as you can see, active listings also in the South County were way down year over year, but the pending listings, buyers are still buying there like crazy. So there's not enough supply there. And here, lastly, above Sunnyvale, north of Sunnyvale, still heart of Silicon Valley, Palo Alto, Los Altos, and Mountain View. Pending listings year over year. Palo Alto's up 12%, Los Altos is up 64%, Los Altos Hills is up 40%, Mountain View is up 5%. Literally everything above Sunnyvale is up in pending. That means Palo Alto's still selling like crazy, even though there's a lot more houses for sale. Los Altos, we saw that active listings were down, but as you can see, there's a ton of buyers, 64% up. Los Altos Hills, 40% up as well. So all these people that have been waiting to get into these areas are finally jumping in. But let me explain why I think people are moving out of Silicon Valley. I already told you one reason. I really think that people that are working at tech companies, that they don't know when they're returning back to work, whether it's a year from now, or it's, for a lot of people, it's indefinite. My colleague here, his girlfriend works at Apple, and her return to work day is indefinite. So a lot of people don't know when they're going back to work. So they're taking this chance to, okay, let's just get out of Silicon Valley since we can work from home now. Let's move just a little further where I can still commute to work if I need to, but maybe not an everyday thing, right? So they buy in Morgan Hill or in Gilroy, and they're willing to give up that center of Silicon Valley to get a bigger lot, a bigger room, a bigger house, whatever. It's worth it for them right now. But this right here, this graph, is the second reason why I think people are deciding to move out of Silicon Valley right now. So this is a home appreciation graph since January, of literally starting this year up till now, up till September. And then I'll put it here on the screen, but there's this little dip right on, January 20th. Sorry, this was every year over year, from January 2013 to January 2020. But literally right here on January 2020, there's this little dip on the graph. That's the pandemic. So it went down just a little bit, just while realtors were not allowed to work. I think it took about a week and a half, or maybe 2 weeks, until the federal government and the state government marked us essential workers. That's when real estate got back up again. And look at this graph since then. It's just been up, 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 up. Literally 11.4% appreciation this year. 11.4%, which is absolutely bananas. So let's just do the math. Let's just play with easy numbers, but because it's hard to say an average price here in the Bay Area. Let's just say if your home was $2 million before pandemic, post-pandemic at 11%, before pandemic you probably had like a 5% appreciation rate per year. So it doubled during the pandemic. So let's say if your home was $2 million, 11%, that means you made a little bit over $210,000 just from January till right now, beginning of October. So a lot of people are finally pulling the plug and saying, let's just cash out now. If people were waiting to retire in 2 years, guess what? It's not worth it. They'd rather sell now because they just made an extra $200,000 for retirement just by selling their house. So I really think this here, check it, it's just going up and up and up. We don't think it's sustainable. Here at Intero, we think it's gonna come down soon, or it's not gonna crash. I think it may correct itself. I don't think it's sustainable for it to keep going up at this rate. So I think a lot of people are taking advantage right now and walking away with their equity, with their appreciation that they've made up till this point, and saying, you know what, let's just take our money right now, buy something else, maybe in Gilroy, Morgan Hill, maybe just 30 minutes out instead of the heart of Silicon Valley. We'll get something bigger for cheaper, and it'll be great. So those are my thoughts. I think that's the reason why people are moving out of Silicon Valley. One, their return to work is indefinite, and two, they're walking away with a lot of cash from the appreciation they've made in the last few months. The data's crazy. The data is telling us there's a lot more houses for sale in the heart of Silicon Valley. That means people are selling, people are leaving, they're exiting Silicon Valley. However, don't let that number fool you, because the pending percentage told us that people are still buying more than supply we have. I couldn't word it better. But yeah, I hope you enjoyed this video. Thank you for watching. I really tried to break down the numbers for you and break down this insight that not a lot of people have. These heat maps are crazy, but thank you for watching again. Let me know if there's anything I can do for you, and we'll see you next time. Peace.
Give me every time.